All right, everybody, we've got a good group of folks in here now. We're going to go ahead and get started. First of all, thank you so much, everybody, for joining. Um, my name is Hampton Vaughn, and I'll be moderating, hosting the discussion we're going to have today, which is titled "You're Paying Millions for Technology. Why is your team still doing so much manual work?" Um, Couple of folks I want to introduce you all to. I'm joined by two folks here who've, essentially lived this from both sides of the table, right? First up, we have Kyle Kneubuhl, my colleague here. He's managing director at Uptiq. Kyle spent about 2 decades or so as a commercial banker and credit operations leader at places like um, Boston Private, Preferred Bank, Union Bank, before he moved over here to Uptiq on the technology side. And then we also have John Mignone. He leads U.S. Bank's mid-capital and community bank coverage team across Texas, Louisiana, Oklahoma, Arkansas. And before U.S. Bank, he ran correspondent banking and fintech coverage at Texas Capital Bank. And earlier in his career, he worked at HSBC, Citigroup, Morgan Stanley, and Goldman Sachs. He also teaches the FinTech Master's Program at University of Texas, Dallas, and we're extremely excited to have him with us today. Um, so, Kyle, John, just to kick this off, our fireside chats here are very informal and, essentially off the cuff, but just some of the, key topics we want to talk about today is, this credit simplification opportunity that Agentic AI is kind of bringing to the industry. So one of the things we want to hit on today is just, where does streamlining the credit process actually start? Using guardrails that institutions already have today, reducing manual review, handling more volume without adding headcount. How can this type of technology help, tackle some of those really complex issues that plague the industry today?
John, you want to start?
Yeah, sure. No, pleasure to be here. Obviously, appreciate the opportunity, guys. And kind of the way I kind of look at it from just banking in general, right? It's kind of taking different approach where you're looking at it from a risk and management perspective originally, where if you've done the audit around your own processes and procedures, this is just going to be a tool that you're able to enhance the capabilities that you're currently doing. There's obviously other guardrails and safeguards that you have to put into place, which I'm sure Kyle can go into from Uptiq's perspective and what you guys help with. But that's kind of it in a nutshell. Is that you're not you're not replacing the processes and procedures around what you're doing from an AI agent or agentic capabilities that you're doing. You're leveraging what you currently are doing. It just allows a lot of the I'll call it mundane tasks, whether it's spreading or documentation intake or even just looking at it from a memo perspective of just writing the memo. And again, I think a lot of the stuff comes to double checking and making sure what you need to be doing, what you're actually looking to do to get your output correctly of what you're looking for, both from the institution, but also from an individual perspective. That's kind of how I would look at these things, kind of at the start from an audit perspective of where are kind of the belts and suspenders that you need to be doing there. And obviously having an open communication with your regulator is always important and your audit team and obviously internal or external audit sides.
Yeah, no, I agree with that. I mean, the best way to think about it, because AI has so many definitions, and how do we, look at this? I think one, we have to kind of re-understand the architecture of what technology is and how we purchase it and how we implement it. So a lot of people think, well, if I want to go into AI, I got to rip out systems, or it's like buying a whole new LOS, and it's actually not. It's something that can be pieced together to kind of fill manual gaps. I mean, right now, from my experience and what I'm seeing with the clients and members that we're dealing with, is they have these systems, but there's this whole underlying manual workflow that has to happen where people are copy and pasting from system to system. That they have to, fill gaps in where those systems aren't doing things. And really, the best way to think about it is, AI is that connective tissue that's orchestrating those things and bringing full workflow agentification across those systems. And then eventually, to John's point, I think with those types of implementations of AI, you can do an audit of the systems and say, what are we using? what are we not using? What makes sense for us to continue on, and where can we evolve into more modern technology to allow our experts to do what they do and give them more time to go do those revenue generating processes. John, you actually brought up a really good statistic to me earlier that I thought would be pretty interesting on usage of legacy systems. Could you share that?
Yeah, sure. And kind of one of the things I'll take the approach, depending on, obviously depending on your audience and how you're looking at things from multiple different perspectives of where you are in the institution, right? From a CEO's perspective, it's more strategic, right? You're trying to figure out both from revenue generation, but also cost analysis, right? So that kind of leads into this, where yes, strategically, everyone wants to make more loans and make business and look from fee generations and kind of what they're doing from business aspects, but they're not mutually exclusive. You should be looking for ways to get an ROI on your tech. Your tech should be a valuable tool for you, whether or not it's in-house. If you could potentially do it and it makes sense from a maintenance perspective, majority of the time it won't. But again, if things that you can take in-house and you get that margin. Then secondly, from a vendor perspective, and working at the big banks and working with small banks and everyone in between that and credit unions, one of the things that some banks do it already, some people do not, and I think something that should be put into place, whether or not it's quarterly or yearly, should be an audit of your vendor management, one from contractual obligations, but also for usage. Most of the time, people have any sort of thing that happens on a quarterly basis or annual basis is managers have to certify that they have access, or people that are working for them have access to these certain systems. That's one portionality of it. Are they actually being utilized? And then you have the user requirements from Bloomberg or whatever these different types of sites from Reuters and everyone else, S&P. But there's multiple different. You can look them up between McKinsey, KPMG, all of them done it over the years, and they do it even more frequently for people privately. Is what is the actual usage that you get even out of Microsoft Office? 99.9% of institutions are using Microsoft Office, but what are you utilizing it for? Right? You're paying for the full enterprise pride majority of the time. You're getting things that are in there that you probably don't use, or if they are, it's very, very small, limited amount of individuals that are actually utilizing that. Are you actually getting your benefit from it? And when they've done the analysis, regardless of what it is, it's probably 15 to 60% of the actual enterprise vendor management that you're putting into your institution. It's actually being utilized. And I think we talked about before, Kyle, was if you're looking at most things, and even from a vendor perspective, even if you're using 70% or allegedly using 70% of anything that's integrated, how many people are actually utilizing it, and how many are they actually using all the functionalities that are going upon it? I mean, you can look at core systems, you can look at different things where if it's not fit for purpose, there's probably a very small percentage. You're probably looking at least 50% of that number that's actually truly being utilized to that aspect. What most people do, and again, I kind of joke about it, where there was an individual that I used to work with at HSBC, and and I think I told Tyler this. It's almost like pimp my ride, right? It's one of those things that showing my age, but it is one of those things where you're taking a system that's cheap for you, but it's not fit for purpose. You're going to customize it so much that you're effectively breaking what they're going to be doing, and now you'll never get upgrades. Or if you do get an upgrade, it's going to take you months to do UAT testing and make sure that nothing else breaks. And people are terrible at doing is retiring systems that they're trying to replace too. So now you've spent all this money for a new interface or a new user or a new integration or a new API, and you've never retired the old system. And that's always problematic. And I look at it from an operations perspective in a lot of ways, where you have key person risk, you have key technology risk. So when you look at it from that perspective, utilizing AI and agentic AI, you're able to eliminate that risk in a lot of ways, because most people do things off the side of their desk, or they know ways that this system works that no one else knows how it works. There's been litany of different banks that I've seen recently where they've had people that they've wanted to kind of move on from because one, for technology purposes, or just fit for talent, or whatever it might be. Those individuals have been with the bank for so long that they know everything that is about that system and how things work and how the bank is expected to have that outcome, but no one knows what goes in behind that. And that's where it allows you to kind of do this audit, both from a vendor perspective, but also from just workflow processing. Does it actually make sense for you to reach out to a customer 6 times, right? It doesn't make any sense potentially. Well, here it allows you to reach out initially, and then maybe along the way where you need to, but being able to systematically streamline your processes, which allows you to get more volume, more looks at different things on the credit side, leads to ROI, and it leads to the ability of your talent being able to do many other things and not going to just do one thing. And I don't think this is necessarily a replacement of individuals. This enhances everyone to get to that level where you're able to do a lot more, or the volume is a lot more for what you're looking at. And you're getting to that point where, and I think we've talked before, if you look at credit, and I take the kind of the simplistic approach, 95% is going to be the same. It's mathematics, right? It's spreading client documentation intake, whatever it might be, to that point. From majority of financial institutions, once you get to the one point in time, unless there's subjectivity, which again can be made into these agents, 5% or less effectively is a finger in the air. You're looking at it, you're taking into other considerations, you're weighing things differently than other institutions, and that's your secret sauce, depending on the industry and everything else. But that's what you want to get to. When you're looking at 5% of these things, you're able to look at things at a more real-time basis where you're able to get back to someone either as a quick no or a fast yes. Isn't that more appropriate for your client base, whether you're looking at a community bank or a member in a community in a credit union? You're trying to get to that place where you're streamlining that, because the instantaneous aspect is available on the consumer side, right? So when you're looking at it from a commercial perspective, it hasn't done that yet, and it's available. It's clearly with you guys, you're able to kind of build that out for people. But that's where I think a lot of people just don't look at it from kind of multiple perspectives in that kind of way.
Yeah, no, I think that's right. I also think, just touching on originally when you were talking about auditing and really coming up with the ratios and metrics of what is our technology doing, how are we utilizing it, what are we actually paying for, but using, who's using it. I think the one thing that you also need to address is, how much, even with these systems, are we still doing the manual work on, and hence why we had this fireside chat today. I really see, manual work is often like the hidden tax of disconnected technology. And one of the things that having an exercise, with a company like us from a consultancy standpoint, is really bring the subject matter experts, the everyday users of the technology that are running these workflows, and then your technical and your CTO together to understand. Because the big picture I see is they have these systems they use. They need to build these manual processes to make their process work, whether it be from one system to another, or I have to go outside of a system and do it in an Excel worksheet and then bring it back to the system. And that takes time, and that time costs money. And so that hidden tax has to be part of that ratio to really give a true evaluation. And when we do our consultancy and bring those together, tech learns more about what production does, because to your point, if we're configuring for that 1% change, that's their secret sauce, which our systems allow and AI allows, tech has to understand that, and that gets built out by production. So these tools, the way we approach is kind of backward. Normal legacy purchasing, tech looks at it, understand what it needs to do, kind of validates it a little bit with production. This one, it's flipped. We're building these things for production and workflow, understanding the nuance of the day-to-day and how they want those outputs to go. And then from there, using the technology to complement into the tech stack. Or in some cases, if it makes sense, allowing it to actually replace existing technology. So,
well, I think to segue, there's obviously a lot of new vendors and old vendors, right? That are popping up. It seems like every day there's a new one here and there, right? And from a bank or credit union executive standpoint, it's probably a nightmare to track it all and keep up while dealing with all the hype and the headlines and everything, right? So, putting ourselves into the shoes of a stakeholder at a bank and a credit union, what do they need to do, taking into consideration all the vendor fatigue that they probably have? How do they actually evaluate an AI partner, beyond the technology itself? What are the capabilities, the experience, the governance, integration strategies, and long-term commitments that a vendor in this space, these days more than ever, should be able to demonstrate, before getting a bank to kind of put pen to paper, so to speak.
Either or, John, you want to go first?
Yeah, no, you can go first. You go first.
Yeah. Look, I think the reason I'm sitting in this chair and is kind of showing what needs to be done. These AI agents, or at least these vendors that are out here, are kind of solving for point solutions, which I understand. I mean, some people want to solve one problem, and that might be what it is. But truly, I believe that the old, SaaS, BaaS model of, just selling the software, but really not understanding it holistically is the difference. What we do here is we have people like myself with extensive experience that have worked inside of financial institutions and understand workflows and, different areas of what we're trying to solve, and allowing us to help within full departments and letting those departments talk. But the larger thing that we do is we understand on the back end that these things have to be compliance and bank grade. There's regulations that these things have to do. At the end of the day, the institution has to be able to do three things. It has to show that these agents or processes are grounded within the policies and procedures of their risks, compliance and regulations they have to adhere to. They have to be provable. So anything that an agent does has to show what it did, why it did, what the provenance is, who allowed that, whether it be a policy report or an individual that is driving that with accountability. And then they have to be guided. They have to be guided within whatever system with hard stops, or being able to pull out instances back to where if it doesn't know what to do, it has to come back to somebody to make that choice and then learn from there. So my thing that I think the entire industry has to really adjust to make sure that financial institutions are comfortable with the technology is to understand that at the end of the year, when they have to explain what these systems did on their behalf, it should be very easy and transparent, and also be able to give whatever reporting or evidence needed to the auditing and compliance and regulatory agencies that is satisfactory to allow them to continue to evolve in it.
Yeah, I would echo those sentiments. And again, from a board perspective, kind of the biggest misnomer that a lot of people have is that the board kind of is out of the question, right? That they're not involved in these decisions. A lot of times they are, whether it's family owned or if it's a membership from a credit union perspective, right? The co-op aspect, they're all involved in the discussion. They all have to know what's going on, especially this day and age. You can't have willful blindness of things that are going on in your institution, and particularly around something around your automating components, right? RPAs have been around for decades, and it's kind of a more sophisticated RPA in a lot of ways if you want to go to the baseline kind of component of it. But the onus and risk is still with the institution, no matter what. And that's something that it starts to, almost a paralysis analysis, right? You do get tons of inundated aspects of the same people coming in. No offense, but you do get similar type of people that are coming in.
No,
Oh yeah,
true.
no,
Call it as it is.
yeah, and again, I mean, you go to, AOBA, you go to acquire, be acquired, and you'll probably be solicited by 50 people that are saying, oh, I do AI. And they say, okay, great. What does that mean? What exactly are you providing for? Where's the solution? And I think from a roadmap perspective and strategy, there always should be something from a institution's perspective that you're looking at. And it should be, again, I look at it as an asset. Your technology should be viewed as an asset. How are you enhancing it? Where is it getting to? How does it help the customer? Where does it get to the customer experience? And quite frankly, where does it do from an internal perspective? And to your point earlier, if you're constantly doing things manually, whether or not they say it or not, eventually it starts to grain on people and it starts to lower the morale. This isn't working. I've asked for things internally to get things fixed. And that's what ends up becoming more of the problem from a culture perspective, is that you're not leaning into helping out your individuals. And again, you might try to, and you're trying to do that through your other known kind of constituents that you're doing from the vendor perspective. But again, fit for purpose. What exactly are you trying to solve for? Are you taking a sledgehammer to a scalpel type of situation here? You're trying to do one thing, or are you trying to do multiple different things at once? And again, some things might be a preferred type of solution that you can get to. However, from a board perspective and everything else, and again, being in this industry for a long time and doing everything in it, from investment banking, everything else, if I'm looking to try to get an advisory deal from someone and you got to go to the board, they're going to look at that institution as well. One, from prestige and notoriety, but also from, are you going to be here tomorrow? And that's always a concern when you're starting to talk about fintechs in general, right? Where are you in the raising of capital? Where are you? Who's your clients? How many logos you have? What are the business continuality? Are you in multiple locations? Are you global? Where's your backup? Who are you using AWS? Like all those questions should be asked from the board level, if not from your CIO or CTO and everyone else in between, when they're having these discussions with fintechs, to make sure that you're having all those things checked off as you're going to have these discussions. Because if you're not doing that due diligence, and again, I think what you're seeing now, which I think is rightfully so, and they should, not even from bankers, banks, and kind of the QSOs, but also from associations in these states, they're starting to get more involved in there because their members are asking for it, and they should. Is that who in this industry is, I'm looking to try and do this, who would you potentially recommend? They're not asking to pick winners and losers, but they're saying, okay, based on what you've seen and their due diligence in kind of high level aspect, because again, the onus is still on the institution, where would you kind of steer us? And I think that's appropriate for them to be able to do that for their membership and getting to that point so that you can kind of weed out a lot more. Because like I said, you can go to any of these conferences or anywhere. I mean, you're just inundated, no offense. I mean, and again, you're doing a job, and a lot of guys from business development, we get it, especially on the bank side and credit union side, I'm sure. But how many emails go unanswered, how many phone calls go unanswered. But I get the point. But leading with the strength of the institution and from a fintech or company perspective of what you're solving for, I think matters more. Because again, they don't want to be, it's a difference where you're looking at things from what you're solving for that is new to the market, right? This has been, it's starting to become matured, right? Where AI agents, either you've built it correctly or you're trying to figure it out still, right? And you guys have built something correctly for what fit for purpose. And I think a lot of the times when that ends up happening is in the beginning, and I've always take the approach, and I think Kyle tends to agree as well. From my perspective is, I'd leave your core alone, right? You don't touch your core. You don't need to in this day and
Nope.
age. You plug into where you need to plug into it. An API or UI, I mean, the fact that if you can't do that and it's not part of the cost, if you need to do that from a fintech, then the bank should, and financial institutions should kind of look at you and say, you know what, if you want my business, this is going to help you later on anyway. So like, we're not paying for that. You guys should probably put that build in there potentially. And those are negotiations you guys have. But how I always looked at tech in general is, if I need to get something to market for my customers or to solve a problem, choose the best one available at that point in time. Again, banks are notorious for paralysis analysis. They'll review things for decades and they'll miss the opportunity. I think getting to the market, doing something that makes sense, and you're not going to have a tech mess afterwards, but the financial institution, you'll have the scalability. Because again, if you're doing a 3-5 year contract with some of these fintechs, and you guys included, is that if you're not innovating and getting to the point at the end of that contract, not even just from a cost perspective, I'm talking about just pure ability to actually do the job, or regulatory components, right? You're not really being updating on the regulatory stuff, and you're not upgrading your capabilities of doing that. At the end of those 3 to 5 years, if the viable solution, you're going to have 5 people that are just along the way with you that potentially is going to be able to take that business. Because you know what? Well, I'm going to jump to that horse because that horse is much faster and is much better off for me in the long run to be able to scale and grow my institution, versus sticking with someone that's going to be able to do something that's flatlining. And that's, again, just because fintech created something doesn't mean it doesn't need to innovate constantly. And that's where I think financial institutions kind of miss the mark with it at a lot of times, is that they think that they have to stay with them forever because it's a pain to move. It's really not that much of a pain to move as it used to be if you don't do certain integrations and make it long-winded, like kind of my answer. But a lot of the times you kind of do that.
Yeah, no, that's right. I think we also missed the number one thing from a partnership sense. Their stuff has to work. Like there's
yeah, it's great in demo, but not in actuality. Yeah, that happens a lot too.
Yeah, and honestly, the other thing I would bring up, because I always told everybody here, as we were building these systems, out of everybody in financial institutions, the hardest person to sell anything to would be me, because I want to touch it, feel it, use it, try to break it, and that's the type of level we build things here. So I'd also say, from a POC standpoint, it needs to be able to demonstrate up to a certain level of what it needs to do, and then show how it configures to actually do what that institution specifically wants it to do. But to your point, and I think it's one of the vital parts is, what's the other layout around that? What's the scalability? What integrations can it go into? Because at the end of the day, AI is great, but AI runs off data. And if it can't access data in your systems, then you're probably creating another manual process. It needs to be able to
Yes.
push and pull between LOSs or document repositories or core systems. And having that entire foundational integration and having the pipes laid to very easily do that, that's one of the things, at least in our world, we knew we had to have before we ever went to market. Because again, we can build really cool agents, but if you're just feeding those agents manual stuff over and over, yeah, it's going to give you some efficiency, but it's not going to actually automate. And that's one word that I think a lot of people misuse is automation, true automation, to where your experts are doing what they need to do as experts and not the mundane manual, but they still have an overview to make sure it was done correctly to make decisions faster, which ultimately helps your clients and your members, get to that decision faster. And at the end of the day, the intangible that gives you is great reputation. I mean, look at private lending. Why is private lending important? Because they charge 3 times more, and there's usually an exit fee, but they can usually get it done in 3 weeks. We'd rather have an institutional rate, something that's longevity, longer term. But if it's going to take me 3 months to get to a decision, well, that might affect my business and my choices and the decisions I need to make to be successful. I'd rather pay up front than after. We gotta figure out how to make institutions actually automate to where they can work on that type of level of speed. And I truly believe AI is the best way to do it, by looking at what we have now and making it better to where it's not working, but eventually looking at how does this workflow truly automate an institution.
Yeah. And again, AI is going to allow you to augment that, right? You're going to create this new benchmark that is already there. You're going to enhance it for going forward. And I'll piggyback off of what you're saying is that a lot of the stuff that you look at from the technology perspective too is that, especially on AI, they don't look at it from they look at it just saying, okay, well, what exactly is it going to be doing? And from a technology build perspective, right? And I think that's part of the issue is that the build isn't the issue. It's, can you actually connect to what you need to connect to? I mean, you point at any bank on a map. I guarantee you, they tried to do a golden lake, right? They tried to do a data integrity component that's going to be centralized. Everyone's able to do that. But if you have something that is able to pull from multiple different sources where you don't have to rebuild everything, but you're getting data where you need to get data and putting data where you need to put data, what's the difference? And this almost acts like a middleware at that point versus just a standalone entity solving one manual task. That's what you want to get to from an AI perspective, I think, is that you're having this centralized functionality or ability that you have users being able to get information at one location and be able to assess how they want to assess things. And then when they do input things, they don't have to go to 5 different screens in order to put something in and stuff that it's just manual that you're, oh, well, this has got to be 0.06 because we're really jamming it into this one. And this one's got to have this street address. And this one's got to be, something. That's the problem with a lot of things from banks is that, again, you do get different systems that do things better than others. So you got to have something that's going to tether that together because nothing's ever going to work perfectly together. So being able to have the technology from an AI perspective, it allows you to do that, which, again, a lot of them do, and yours included, to be able to get that middleware information all at once and then disperse it where you need to disperse it for your reporting and all the other things you could do, which again, you can start to augment that later on to say, okay, I can just run my reports from here. I don't need to pull from, have 5 different reports now. And then you start to coalesce it together. And I think they had a question in there as well, Hampton, as well from us. I think it's timely.
Yeah, well, I was going to say, just to cap that off, I'm sure everybody on this call is like, oh yeah, I'd love another login and credentialing screen. Wouldn't that be great?
Exactly.
Go ahead, Hampton.
No, good. John, you mentioned 3 to 5 year vendor contracts and things like that. A lot of the banks that we've worked with, there's obviously a lot of different situations with the existing systems, right? There's this completely replace this thing. They come to us and they'll be like, please replace this thing, or hey, make this better, right, with your agents or what have you, right? But then there's this situation where the banks, look at us consultatively, like, where do we go with this? Where do we find, an immediate short-term impact that's going to drive an outcome that we want and actually show results? That's almost always, a driving force in these conversations. So, considering the fact they've accumulated all these different systems, right, and these disconnected applications, how do they figure out like, is the goal to replace them, connect them, orchestrate them, or how do they figure out what the most practical approach to possibly modernize all this existing tech? What is that even going to look like? How do they go about that?
Yeah, I mean, it changes to depending on who's kind of in charge from that perspective, right? And whether or not it's by committee or by decision of the CEO and the board, right? So depending if it's a COO or a CIO, a CTO, how it's structured and who's actually part of that integration of what this strategy looks like, right? Again, going back to viewing your technology as an asset for your bank, what does that look like? Where are you going with your technology? Not just from a digital perspective, but again, just how is it being utilized and what's the workflow? Is there ways that you could save time, make it more efficient? Are you getting the reporting that you need to get? And we've talked about it. Like eventually, in the utopian aspect, is be able to press a button and get regulators come in, you're like, here, push a button, here you go. This is everything you need. you know, See you later. It's up on the site. Come to me if you need anything else. And being able to get to that point, again, it's not that far off, quite frankly, but it's something that from a strategy perspective, depending on the individuals, which again should be a collective aspect, I think it's really kind of looking at from a business perspective, where are the bottlenecks? Why are you not getting the answers that you need to get to and getting the information you need to get to serve your clients and the community versus, okay, technology is saying that they're just building stuff, right? And it tends to happen. They operate in silos, regardless of entity size, quite frankly, which is you can look at it in many different ways. But that tends to happen more and more because you hire someone to do a job, and again, it's just how that structure kind of comes in. Do you have committees? Do you have oversight? Do you have audits? Do you have reviews? What does that look like? Or is it just one-to-one with someone else talking about it and just giving an update rather than having an overall discussion strategically of what that build should be and what are you actually doing? And what's the time frame? And are you actually holding to the time frame? Why is it not in, who else is participating in? Is it purely you're dealing with vendors or are you actually building stuff? There's multiple different facets of how it works. But again, it's going to be entity to entity of how they're looking at that. But that's where I think a lot of people, for what they're trying to do, to not look at someone that can be able to merge it together to say, okay, is this something that we need to replace because it's obsolete and we're moving on from it, like I said before, or are you just going to keep it in the background because you're scared if you turned it off? It's completely depending on how it's situated. And again, people are afraid of breaking it. We get it, but that's what you test for, and that's why you plan it and you try to do all these things. And again, there's a cost involved, right? But the benefit is if you're streamlining it, or if you're able to streamline it in a way, or if you're just plugging and playing, you could do that too, right? And I look at it always kind of like an octopus with tentacles, right? You plugging to fix the issue where you don't really want to you worry about it, right? What if we turn this off? And you could do dual testing and dual production. Just say, okay, well, we're going to try this way, and we're going to let this run this way, and this one run this way. What happens if we turn it off? What breaks? And then you can keep the production running while you're still trying to figure out, okay, well, what happened with the other stuff, and be able to turn it off. And you have those capabilities now that you didn't have before in the technology sector because of the fact that of the integration that you're able to do with other platforms, with the API and UIs and everything else that is capable now. I mean, people could do it off their desktop if they really want to through Claude and everything else. But, make your own programming and tasks and quite frankly programming tools, right? But unfortunately, I can't give you a direct answer with it, but it depends on the institution. But I think strategically, if you're viewing it as a active business line in that way, I think you'll have more reviews and what needs to be sunset, what doesn't need to be sunset. And quite frankly, again, it comes to the discussion, fit for purpose. What are you exactly doing this technology for? Why do you have that? Is it being used? It's the same kind of discussion, right? It just goes back to that. It's the same thing. It's the same review you would do with any other individual at an institution. Are they doing what they said they're doing? Are they doing above and beyond? Are they meeting expectations? Or are they not? And then you kind of do the same thing on your technology stack. If you're not, that's kind of shame on you from an institution perspective, because I think you're just either, again, everyone likes to point the finger at vendors. This failed, this doesn't work, this is not great. Well, then do something about it. And that's, again, it's because of the fact that they've signed long-term contracts, right? I think eventually you're going to if as an institutions and as an industry, if you push them a little bit more to have shorter term contracts and require them to actually perform within that contract versus something that, no offense to some of them, I mean, they're 10-year contracts, right? Like, okay, thing broke. Yeah, it broke 5 times over the 10 years. It cost us X amount of money. And, oh, yeah, but who else are you going to go to type of thing? That's the unfortunate part.
Yeah. And honestly, I think that's why entering into AI currently is actually a lot easier than the legacy purchasing process, right? 10-year contracts, we have everything on. And that's why we're, today talking about especially, manual work. We really believe that people that are entering AI should do it at small, like in small to medium size. It's not a gigantic lift where we're replacing these systems. In some cases, it makes its own business case evident once they start using our products, which is obviously kudos to us when that happens, and it happens more than you would think. But entering in on a manual process that right now someone is doing and building an agent, like we want to fix spreading, or we want to, I don't know, have something just take documents from when we're doing onboarding and making sure it's organized and audited within our repository. If you're using an AI vendor to do that, and for some reason it doesn't work, which we have not come across, but if it doesn't work, then what you just go back to the manual. There's no production let down. You're just doing what it was. So there's a lot of safety nets when it comes to where you want to approach. But then eventually when you're fixing 7, 10, 15, 25 different manual processes or things that your system doesn't do well or not at all, after a while, that orchestration just becomes the workflow itself. So you can eventually get to it. And, those contracts are usually short in nature and they constantly adjust. But then when you're actually looking at that landscape, you kind of do what we talked about in the beginning. You do an audit of your tools and you go, well, do I really have to pay $3 million for this LOS when really all it's basically is at this point is a document repository for me? Let's relook at this and look at the contracts and figure out what that looks like. But to your point, some of these systems are never going a good way. Core should always be there, but what should core be? Core should be a ledger system. That's all it is. Let it be a ledger system. Let it hold. And when institutions are allowing their strategy and innovation plan to be on legacy core providers to be something that's really not within the depth of that to me, I think you're putting your strategy on hope mode. And let's be honest, a lot of us wait a long time for it. When we get there, it's not what we want it to be. So start small, look at it, and no matter who's making those decisions, make it a small investable point to kind of get your feet wet, but then from there, add and stack. And then eventually you'll see exactly where you want to go and do that deep dive and forensic audit on what you should do with your existing tech stack.
Yeah. Well, and again, I think you mentioned it one time to me also is on just the it's like Lego blocks, right? You're building upon things, and the thing for banks is that belts and suspenders on everything. And to your point on that as well, which I'll highlight, is that if you don't think it's working right, you stop it. You go back to the manual. There's no harm, no foul, where you've spent millions upon millions of dollars on having this system that you thought it was going to do that. Now you're in a long-term contract for something that's going to sit there forever stale, and you're just going to go back to the manual process. Yep. More than likely, it's going to solve your problem, and you're going to be like, oh wow, that really works. Let's do another one. And that's the point, is that you can turn the dial as you want to, and be able to turn it off and turn it on. And again, if you want to have the belt and suspenders on the actual back end, then test it manually. Do it on a monthly or quarterly or yearly basis. Say, yeah, we tested this. It works. Okay, great. You show the regulator, show your audit, you move on. Do another one. And that's where I think, to that point, you get the snowball effect where people get comfortability around it. And again, it's not something for you to get complacent with, but it is something that allows you to start to move on and start to push the ball down the road a little bit on your technology capabilities.
Yep. Perfect. I think we're in question mode now, right, Mr. Hampton?
Yeah, just real quick, everyone is going to get sent Uptiq's Banker's Field Guide to AI Adoption. If you want to scan this QR code up on the screen, you can pick that up. It operates around the core thesis of that, banks, credit unions, they don't have an AI problem. They have an alignment problem, which kind of echoes along with a lot of what we just talked about here. So really helpful guide. We've gotten a lot of great feedback from our clients around it, just kind of helping set up committees, governance, auditability, things like that, as institutions try to wrap their head around how to leverage AI and how to manage it, moving forward. So great deliverable on our end. So everyone will get that. But beyond that, yeah, let's take some Q&A and go from there. We got one. As AI vendor fatigue grows, what distinguishes a trusted AI partner, um, move beyond the technology, capabilities, governance, and all those things? What matters the most?
Yeah, I think we kind of touched it in the thing. It's understanding that AI vendor understands your institution. So again, why is Uptiq made up of mostly lenders, bankers, deposit, compliance people? Because we've sat in the seats. We understand what those institutions do. And when they explain it to us, it's not like they're educating us. They're just saying, here's the problem. And we usually know how to fix it because we've been there before. I think that in the market in general, that's going to be a very important differentiation. Is look, we might know technology well, but we need to understand institutions and then figure out how to apply that technology. That's what our roadmap is, and that's what our strategy is, and that's why we have such good, really good relationships with the institutions we service.
And I would just add, again, just looking at anything from a common sense perspective, right? You're buying the seller, right? You're buying the individuals that are pitching to you and the ones that are actually going to be behind it. They're not going to be off after, they walk away after the sale, right? That's the biggest thing from a financial institution is that the people that you're interacting with are actually able to do that when there's a problem to get it solved, right? And I think from a solution component, that matters more, right? The technology to a certain extent will relatively become commoditized, right? But the thing is that are they actually going to be working with you as a partner, and is it someone you want to actually do business with in the long term?
Yeah.
That's how I would look at a lot of this stuff in general, from just technology and on that side, because. And like I said, if it's something that's going to be solvable or something that people can make money at, there's going to be multiple different entities that are going to be coming into financial institutions to try to sell it to you. But if it's a partnership that you're looking at and you like them and you can trust them to get it done and they're able to work with you to scale and grow your company, I don't know why you would move. But if it's something that they're not willing to do that and they just made the sale and they're resting on the laurels, yeah, you have the opportunity to move. You should, and you should be looking elsewhere because you want to have that partnership with your technology vendors. It doesn't make any sense not to.
I think we're at the 45, unless there's any other pressing questions.
Yeah. All good. I think that's it. Well, everybody, thank you so much for joining us for the Fireside Chat today. We'll have more of these coming up. And Kyle, as always, thank you, but especially John. Fantastic to have you on board here for the conversation. And we all greatly appreciate your insights. So really valuable information and input here from your end. So thank you all and have a great rest of your day.